Everybody ready? Can you hear me? Can you see me? That's the more important thing. Golly, hey, it's great to be here with you. I don't travel very often, mainly because I've got health issues. I got a back that's not the best thing in the world. In 1984, I took a 17-foot leap off my house, and that's been the gift that has kind of kept on giving to me through the years. But thanks to the sponsors, I think by being here, I probably increased the average age of attendee, but that's okay too. Just show of hands, who's 70? Thank you, sir. But hey, it's great. Okay, talk about bridging technologies. When I started trading, I traded SEPD's corn spread at Chicago Board of Trade in the corn pit. And I couldn't have even imagined what cryptos were back then, much less that I'd be involved in them, but that's, I guess, been the case. When I started trading, gold was not a legal commodity to trade in the United States. So I've seen gold become a market to trade. Currency markets started trading, interest rates, stock indexes, and of course global markets, because back then it was the Chicago Mercantile Exchange, the Chicago Board of Trade, and exchange in London and in a few other places. So things have changed a little bit, and I've traded just about every market that is viable in the world. And I think last year I traded 60 markets. And I'm only saying that so that for me, Bitcoin, and Bitcoin's my focus, make no doubt about it. I'm no interest in altcoins. My emphasis is Bitcoins. But for me, in some ways, Bitcoin's just like oats or live cattle. It's just another market to trade. And so that's really what I want to do is give you a perspective. My perspective, I've made my living from my own trading account since 1981. And I continue to be that way today, is give you a perspective of the crypto markets from my particular space in the world. And that is as really a full-time professional trader as I have been I've been in the market since 1975, so that's for just about 45 years. I've some way earned my living in the markets, last 40 of which has been as trading my own account. And I really want to address three things. Can classical charting principles, I'm a classical chartist. There's a lot of, especially on Twitter, I see technical analysis, so I go, where did this come from? This has nothing to do with any technical analysis that I learned. And oftentimes I say, boy, these guys are just inventing it as it goes along, because it has the technical analysis that I see on Twitter and elsewhere on social media has absolutely no relationship whatsoever to technical analysis as it was really framed by the people who framed technical analysis, such as Edwards and McGee, Richard W. Schaubacher. They're the guys that put together classical charting and the classical charting principles. And so really the question is, can classical charting principles be applied to crypto? Because most of the places that I see just about every day is somebody saying, you can't chart the crypto markets. They don't mix. You can't take something that's, that's 80 years old, 90 years old and apply it to crypto markets. It doesn't work. So I want to try to answer that. I want to say, what story do the charts presently tell about Bitcoin? And again, my emphasis is on Bitcoin. And as time allows, and I feel you're not too much of a hostile audience, I might share my general impressions of what I view as the crypto community, particularly the crypto crazies, or I refer to them as either the crypto maniacs or crypto cultists that exist in the crazy world of Twitter. If I'm surprised I'm trading, that I trade cryptos, I'm more surprised that I actually have a presence in something like Twitter. I mean, my kids just look at me and shake their head. But nevertheless, okay, I think, okay, what's the long-term technical view of Bitcoin? What story can be told about the long-term technical view of Bitcoin? I think, is 10 years even a long-term view? How can you even call 10 years, a decade, a long-term view? When I think of long-term views, I'm looking at 100-year trends in stock markets and so forth. And so I really want to focus on three things here, and that is that, and again, I'm trying to answer the question, can you tell a narrative that makes sense about Bitcoin with classical charting principles? And what you see here is that we've had three parabolic advances in Bitcoin. This is a log scale, by the way. Try to find 3 parabolic advances on a log scale in any other market in the world over the last 10 years, and you cannot find it. Now, you could probably find it in some of the other cryptos, but again, my focus is Bitcoin. It just doesn't happen. You seldom get parabolic moves on arithmetic charts in most of the asset classes, much less on the log scale. Here we had one that actually was back in 2011 through 2012. There was a parabolic advance that was broken. Then, of course, from 2012 through 2015 or 13, we had another one, and then we topped in 2014, bottom in 2015, and we had a third parabolic advance. That's just crazy. I mean, as a trader, I look at that and go, that can't be. I mean, that's a dream world to me to think that that's absolutely even possible. Notice I do not have a trend line in this chart. I detest trend lines. I look charts at Twitter and I say somebody's going to the outer galaxies, because that's the only thing that explains this chart, the way that it has lines here and lines there. I kind of go, well, that's not charting as I ever knew it to be. So we have 3 parabolic advances. Now, in each of those parabolic advances, Bitcoin corrected 80+% in the 80 to 90% area. And of course, in this last decline from the December 2017 low to the November-December low, we corrected 86 point something. So that's kind of what I look at as the long term. If you try to put Bitcoin in a longer term perspective, that's what you get. Okay, again, this is just the detail. What I want to ask is, can you look at this chart from the standpoint of classical charting and say, this makes sense, it works? And in the advance that we saw from 2011 to 14, we had an ascending triangle, symmetrical triangle into the top, and we finally broke a parabolic advance and corrected 80%. I don't have a trend line drawn on this chart, but from the standpoint of classical charting, you could see this thing. Now, oftentimes it's easier to see charting principles after the fact than in real life. That's the challenge, is what can you do with them in real life? I mean, I found since my involvement in Bitcoin that this faked me out a few times, but when it's time to really give in a solid signal, when the bell is ready to be rung, using classical charting has been pretty honest. Again, this is just the blow up of those periods. In 2014, the parabolic advance was broken, and here you have a questionable, I admit, there's a trend line here, so I'm sorry, this is the one trend line I'll show, but the correction we had was via a channel. We blew off at the bottom of the channel, formed a rectangle. The last part of that rectangle was a retest of the triangle itself. Then we broke out of the rectangle. Now it's up in this area, and I don't know if I can, does that arrow show up? No, it doesn't. But it was in 2016 that my friend Raoul Paul sent me a chart of Bitcoin, because I had heard the term. I just thought it was some crazy thing, crazy people were trading. And he sent me a chart and said, Peter, what do you think of this chart? And I looked at this chart and I went, oh my goodness, this was something to behold. I mean, hey, I'm weird, and I look at chart patterns, and for me, they're a thing of beauty, and I understand that for most people in the world, they think that's kind of crazy, but for me, I was a kid, I always liked maps, I liked charts, that's kind of the world I live in. I live in the world of geometry, and my wife testifies to that by saying I'm square. But anyway, then, what we saw then in late in 2016 was what now, after the fact, we can say was the next parabolic advance. And now let's look at that next parabolic advance and ask the question, does this make sense from the standpoint of classical charting? You saw the rectangle, an ascending triangle, a flag, a running wedge, if you follow me, and then 3 what I call J-hooks, and I'll talk about those in a minute, but it's the term I give to them. Others may use a different term, but they're kind of J-hooks where the market fakes out, a little double top, you break the midpoint low, and you go up from there. It's kind of a fake out pattern. But we saw that during the advance. I actually, while I thought the December 2017 high was obvious, it was a giveaway, bells were ringing, this is crazy, front page of the Wall Street Journal, Time Magazine, headlines, news, it had all the things that make up a top. Part of me at the time was thinking this could be another J-hook, and I was thinking that it might be, but of course then we broke the parabolic advance, and that changed that. This was my comment along the way about those little J-hooks. I called them a bump with a hump and a lump and a dump. And then we went on to make new highs. And so it's kind of a fake up pattern. We had 3 of those, including what I thought might have been the case at the absolute high. Again, this takes a look at those patterns. And then when we broke the parabolic advance at some point, and that was early in 2018, I was convinced this isn't going to be a J-hook. This is it. My hunch that the market could top has in fact borne fruit. This is a tweet I did, and actually on December 27, 2017, the bubble has been popped, bull market Bitcoin over for some time. For analog, look at gold charts from 2011 onwards. What I was saying is there was an analog to the gold market. This was another tweet I did. General technical analysis rule, violation of parabolic advance leads to 80% plus decline in value. If general rule follows, Bitcoin should retrace to $4,000. Note, this tweet does not make me a hater. I'm accused of being a hater all the time. I'm not a hater of crypto. Believe me, I'm not a hater. It's the best market I had in 2017. I love crypto. But just because I believe the technical analysis of a chart based on classical analysis tells me one thing or another, it doesn't make me a hater. But this is the type of thing where just because then Bitcoin goes on down in the low threes and I get hate mail from my Twitter trolls saying, I thought you were going to stop at 4,000. There again, Brant, you're wrong. So that's the kind of trolling that I have to live with on a daily basis. Okay, so then we break and we go down and we form this enormous descending triangle. And I saw all kinds of trend lines from people showing why this was the bottom. We're going to go up from here. In terms of classical charting, a descending triangle almost always breaks out through the flat side. An ascending triangle almost always breaks out through the upside. It's just a rule of classical charting. If you doubt me, read Richard W. Schabacher, 1933's book. And he'll talk about ascending and descending triangles, or what's referred to as right-angled triangles. It is a rule. Now, this had a target of 28, 2850, 2900, and this is another example that in real time I saw this happening and tweeted on it, but then I got trolled later that your prediction wasn't right. It didn't go to 2800 or 2700 or whatever. This is, it's the kind of grief that a 72-year-old man has to live with in this day and age. You got to have more respect for us senior citizens. Come on, folks. Okay, so what's next? Have you noticed that Bitcoin likes right-angled triangles? Have you picked that up here? And we, of course, put in a 3.5-month ascending triangle at the Bitcoin bottom. Now, I want to point out something else. Again, I may be boring those of you who really aren't into charting. But you notice the vertical drop into the triangle and the vertical rise out of the triangle. Those are called walls, left and right wall. A left and a right wall is unusual. It comes not from bar charting, it comes from point and figure charting. But it's an unusual phenomena. It's a phenomena that represents tremendous strength. Now, there's nothing voodoo about charts. Charts are simply a way that I use to try to determine what smart people are doing and what dumb people are doing. And this told me that there was a very good chance from November 2018 through early in 2019 that the same people who were likely dumped their Bitcoin on the gullible public in November and December of 2017 were reaccumulating, that this was a period of reaccumulation. We transferred Bitcoins from smart hands to dumb hands in late 2017. Now we're moving them back to smart hands. And this is what was happening here. And so we formed the left wall, the right wall. And actually the target of this was only 57.27, or tested the lower boundary of the previous descending triangle. And of course, then we formed a running flag and we blew through here. I don't know where Bitcoin's going. All I know is we have a bottom that is really, really respectable. And extremely respectable. I actually thought that Bitcoin would top out around 67, 6,800. That would have made it almost a perfect analog to what happened in 2013 to 2015. Those of you who have seen some of the charts I posted, I've gone through the analog periods and how they compared, and they compared very well until we blew through 6,900, and then they stopped comparing. So what's next? This is some of the history of Bitcoin declines. I mentioned that 80 to 90%, and the December 17th low, high to the low of 31.35, depending on who you follow. One of the crazy things for me is you got exchanges all over the world who have different prices. As a trader of leveraged instruments that are exchange-based, for me, this is craziness. I don't understand how it's allowed to continue. Now, I understand the technology of Bitcoin is such that it does, but I'll just tell you, I looked the other day at the number of exchanges there were. Be careful what exchange you trade at, because 90% of them are not going to be around 5 years from now, and some of them are going to end very badly. Same with coins. I think 99% of coins are going to end up worthless. But of course, your pet coin won't. And so I promise you, that's my guarantee today. And so you get an idea, and then what I have is number of weeks to new highs. And the big break in 2013 to 2015 required 169 weeks before the market made new all-time highs. Okay, what's next in 5 minutes? Okay, this is the analog. Now notice 2013 to 2015. I'm not an Elliott wave guy. I detest Elliott wave like I detest trend lines. So if you're an Elliott wave guy, please forgive me. I just can't understand X's and Y's and Z's and all of that. Plus, I think there's some fundamental problems with being a Bitcoin Elliott wave person. And if you want to find me in a break, I'll explain why. But I think it only leads to a dead-end street. Okay, so I just kind of label these zigs and zags. As we had the 10 zigs and zags down, we ran up to 10A in 2000 in that period, and then we retested. And I've kind of thought that maybe the same thing could happen. And if you measure 10 to 10A back then, that's where 68, 6900 would have given us in this rally, and it would have kept the analog from going. Now, the only reason that I can argue the analog didn't go was that left and right wall. That was so unusual that I think it preempted the current market from continuing to be an analog with that period, because we didn't have that left-right wall occurring back in 2014, 2015. Again, that shows this a little bit. Then I put out this tweet in early May. The last time Factor's benchmark weekly moving average was in the current profile of turning from down to up was November 2015, just as Bitcoin began its move from 340 to 19,800, depending on the exchange. You had some exchanges that were up in the crazy twos. I still don't understand why that was not an arbitrageable deal, but that shows my ignorance in how you trade Bitcoin, I guess. And so that's kind of my view. I think, I'll tell you what, bottom line for me, and I'm not a maximalist, I'm a trader. I play probabilities. I play the odds. Is I think, personally, there's a 50% chance Bitcoin goes to zero, and a 50% chance Bitcoin goes to 100,000. Well, as a trader, that is one fabulous asymmetric reward to risk trade, one that I can't ignore, especially if I can have some sort of common sense money management protocol that I follow that keep me from being all in if zero is where we go. It may keep me from not being 100x or 10x or 2x if we go up, but at least I won't get alpha, but at least I'll get something. And so I just look at it as a common sense trader and say, let me tell you something. Back in the 1970s and 1980s, I look at a Bitcoin chart and it says, that reminds me of sugar in 1978, or that reminds me of soybeans in 1982. The charts you have, these chart patterns work because you have an immature market, a market that's evolving. 10 years from now, the charts in Bitcoin will not work the same way. Just as the charts today do not work quite well like they used to in the traditional commodities that have great liquidity and global participation. What happens when you get global participation, high-frequency trading operations, algo, is it takes the edge away from trade identification and puts the edge on risk management, squarely on the shoulders of risk management. So you have charts that act the way they do now, and I'm thankful for that, primarily because Bitcoin's a pretty immature market. And as they evolve and get things straightened out within the fundamental structure of the market is placed, we're likely to go into a period where charts don't work quite as well. Again, this is how I envision the market. It's blown through kind of what I saw as the path, and we'll have to play it by there. But I do think that there's a very good chance that we're in a parabolic advance. This takes the parabola and looks at it from here, and that for me would be that red line where I'd probably be interested in buying some. Now, I've got about a minute left. Let me breeze through here, give you an idea of how special your market is. 2011 to 2013, Bitcoin advanced 525-fold. January 15 through D17, 129-fold. Almost 9,000-fold from the October 11th low. From December 2018, I have that date wrong, sorry. But take a look at Dow Jones since 1903 has advanced 873-fold. Compare that to almost 9,000-fold for Bitcoin. You are involved in a market that's really quite unlike anything that we've seen. I tried to go back and say, can I find another market that it looks like Bitcoin? And I did find one, and it happened in the mid-1920s. Anybody know what it is? Well, it was interest rates in Germany in the mid-1920s. Had a move that kind of looked like Bitcoin. It's the only other market that I could find in the last century that can equal the advance that we've seen in Bitcoin, or we saw in Bitcoin, or may continue to see in Bitcoin. And so that's my view, and I'm sticking with it. So I just show you a couple other charts in the 0 time left to show you classical charting. Head and shoulders bottom in Litecoin, Bitcoin. Descending triangle top in Litecoin, number of other patterns. Patterns work well. And so, we'll see that's the end. Talk about asymmetrical risk. Jeff Bezos said if you have a 10% chance of 100 times return, you should take it and bet. And that bet every time, even if it's going to feel bad 9 out of 10 times. So that's all I have to say. Thank you for being a good audience.